Welcome to the Thursday edition of Tech Stocks Daily. Today we're diving into the digital battlefield with CrowdStrike facing a class action lawsuit and service outages. We'll scan Google's ups and downs, including their AI ventures, regulatory hurdles, and new cloud partnerships. Then it's over to MongoDB as they ride the lawsuit wave while eyeing a rebound with sharp earnings forecasts. Lastly, we'll decode GitLab's journey, from Gartner's accolades to legal dramas over AI claims. Buckle up for an action-packed roundup of the juiciest tech stock stories. Hey tech enthusiasts, buckle up, because today we're diving deep into the digital trenches with CrowdStrike, the cybersecurity firm that's been in the hot seat lately. If you haven't been paying attention, you're in for a ride. First up, CrowdStrike Holdings Inc. Tor has been hit with a class action securities lawsuit, and it's grabbing headlines. Levi and Korsinski, LLP, a notable securities litigation firm, is spearheading this case. The core of the complaint is that CrowdStrike allegedly made false statements and hid some crucial details that led investors astray. Do you hear that? That's the sound of lawsuits marching into the room. Here's the scoop. Between November 29, 2023 and July 29, 2024, CrowdStrike supposedly didn't conduct proper software testing before rolling out updates to its primary product, Falcon. This little oops-a-daisy led to major service outages for a broad swath of their clients. Basically, imagine a massive tech tripwire that sent millions of Windows computers into shutdown mode. Not nice if your recipe for success includes keeping hackers at bay and keeping the lights on, right? To make things spicier, these unceremonious rollouts created significant reputational hits and legal risks for CrowdStrike. And right when it seemed like they couldn't take another hit, bam! Here comes the class action lawsuit, seeking to recover losses for these disgruntled investors. Want to get in on that lawsuit action? You have until September 30th, 2024 to request the court to serve as lead plaintiff. And no worries, this legal hotline doesn't cost you a dime, just a whole bunch of drama. Now for those of you considering a fighter bird swooping down on discounted stocks, let's pause. Could this dip be your ticket to potential gains? It's true, bad press can often drive a stock price down to a tempting valley. Sure, CrowdStrike shares nosedived following that global outage fiasco in July 2024. Can you blame them? The event was akin to a cybersecurity apocalypse, impacting countless Windows machines worldwide. And while CrowdStrike had been basking in a high stock price at plus 40% year to date, they quickly found themselves with a more modest plus 8%. Rickety roller coaster. Build your portfolio muscle, folks. But here's the twist. Their fiscal second quarter results still look solid, with a 32% year-over-year revenue bump up to $963.9 million and turned around operating income. However, the pesky July debacle was too tight against the quarter end to completely tank their earnings report. Slide into fiscal foresight. Revenue estimates were down from $4 billion to a slightly unhappy $3.9 billion, with noticeable projected declines in adjusted income as well. CrowdStrike, despite its recent turbulence, is still a major cybersecurity player. Their Falcon platform might have taken a reputational hit, but a lot of clients are pretty embedded in their ecosystem. Swapping platforms ain't as easy as changing your Netflix password, you know? Long story short, while the current scandal and legal shadows aren't painting sunny skies over CrowdStrike, this cybersecurity heavyweight isn't down for the count. Sometimes bad news can be the setup for a good story, decided by your patience and risk appetite. What do you think is ahead for CrowdStrike next? Risk worth taking or bear market bear trap? Stick around because this digital drama is just unfolding. Hashtag Cyber Showdown. Hey tech fans, buckle up because Google's been making waves in the news today and you definitely don't want to miss this. So first up, analysts have a cautious yet optimistic take on Alphabet. Our friends at Cantor Fitzgerald and Wedbush have shared their insights. Cantor's Mathivanan believes Google remains a solid tech bet for growth-oriented portfolios. A lot of emphasis on their search revenue, which has been seeing some good times with a growth exceeding plus 15% in constant currency in Q2. Even though some deceleration is expected, the core search business looks robust for the coming years with query volume and monetization gains in focus. However, this isn't to say everything is smooth sailing. Google's journey into generative AI has started well with positive user feedback, yet there are some challenges too. Regulatory pressures are causing a bit of turbulence, and upcoming infrastructure costs and headcount expansions are also likely to throttle growth slightly. Can anyone else see Google and fines in the same sentence too often? It's almost like they're paper pushers for the DOJ's complaint department. Speaking of which, the second antitrust trial is set to commence next year, specifically focusing on Google's ad tech stack, including Google Ad Manager. This only contributes a tiny portion of revenue and operating profit for Alphabet, but let's not underestimate the headline risks. Google still has its legal dance shoes on. Overall risk to the broad industry might be limited, but keep an eye on those financial disclosures. Switching gears now, did someone say Oracle and Google Cloud? Enter Pythian. This Ottawa-based tech services juggernaut announced new migration services because who wouldn't want to move their Oracle databases to Google's AI-enabled cloud paradise? Thanks to the Oracle Database at Google Cloud partnership revealed this past June, enterprises can keep their Oracle goodies while dancing with Google's top-tier analytics and AI magic. The Pythian crew, stacked with Oracle Aces and 100+ Oracle certifications, promises seamless migrations and post-migration TLC. Not to mention, browsers and all-time learning with Pythian doesn't sound bad at all. They're gearing up to showcase this at the upcoming Oracle Cloud World in Vegas. It's a jackpot of tech partnerships. And last but equally thrilling, we have Infinite Reality. This Connecticut-based startup is taking virtual realms to the next level with Google Cloud's might. Think AI-powered 3D worlds, literally the modern-day Matrix, but less red pill, blue pill, and more practical. Set to democratize immersive tech through IR Studio, Infinite Reality is focusing on providing more than just bespoke builds for big clients. Partnering up with Google's Gemini AI, they aim to create enhanced customer interactions, whether it's in e-commerce, education, or sports. Hands up if you're an online shopping parent, excited to see futuristic e-commerce. Albert Lai from Google Cloud drops the mic, emphasizing Google's pragmatic AI approach to improving customer experiences, shunning the hype for solid application. Expect advances in personalized AI ambassadors and hefty computational power for multitasking in 3D virtual spaces. So there you have it, folks. From analyst insights and regulatory rumblings to groundbreaking partnerships and AI-driven realities, Google's been buzzing on all fronts today. Hey tech enthusiasts, buckle up, because today we're diving into the roller coaster of news about MongoDB. First up, we've got some drama in the form of a class action lawsuit. Levi & Korsinski LLP has put out a call to all MongoDB shareholders who feel the burn from some steep stock price declines. These shareholders are being urged to join a class action lawsuit alleging securities fraud. The lawsuit targets losses incurred between August 31st, 2023 and May 30th, 2024, framing the issue around MongoDB's revised guidance revelations. Here's the skinny. The database company first reported strong Q4 2024 results, but then blindsided investors with lower than expected guidance for the full year 2025. They chalked this up to a change in their sales incentive structure, which consequently led to diminished revenue due to issues like unused commitments and fewer multi-year licensing deals. This nasty surprise torpedoed their stock by nearly $29 per share. If you thought it couldn't get more chaotic, think again. On May 30th, 2024, MongoDB torpedoed its guidance once more, pointing the finger at macro-impacting consumption growth, which is finance speak for trickier market conditions affecting customer spending habits. This double whammy dropped their stock by a jaw-dropping $74 per share, closing at $236.6. Hold the phone because there's more. Another name joining the investor legal circus is Claims Filer. They're reminding investors who have lost over $100,000 about the looming lead plaintiff deadline for the MongoDB class action lawsuit. The tensions here unravel around similar grievances mentioned earlier, including MongoDB's dicey disclosure methods about its sales incentives and unexpected market headwinds. Consensus is that MongoDB execs spilled the beans way too late, causing shareholders considerable grief and massive sell-offs. All right, doom and gloom aside, let's pivot to some blinding spots in the MongoDB narrative. According to the latest from Zacks Investment Research, the earnings outlook for MongoDB is taking a turn for the better. Analysts are lifting their earnings estimates, validating the potential uptick in MongoDB's stock price. Zacks' nifty rating tool, which has a commendable track record, ranks MongoDB as number 2. What's causing the warm fuzzies? Several upgraded earnings estimates indicate growing confidence in MongoDB's rebound. The company is looking at an earnings estimate of 69 cents per share for the upcoming quarter, despite being a solid 28.13% lower than last year. But don't hang your head just yet. For the entire fiscal year, clouds seem to be parting with expectations of $2.40 per share. That's still 27.93% down year over year, but hey, improved sentiment can spur further stock rises. Given that MongoDB's stock has rallied nearly 30% over the last 4 weeks, there's tangible optimism. So to wrap things up, MongoDB's sailing through turbulent legal seas with class action suits, but buoyed through rising earnings estimates, offering a lifeline. Whether you're an investor or just a tech news junkie, MongoDB's captivating highs and lows are something you can't afford to miss. Stay tuned. All right, tech enthusiasts, buckle up, because we've got quite a roller coaster ride involving GitLab today. Whether you're a DevOps ninja or just the average tech lover, there's something in here for everyone. First off, GitLab has just scored a massive win, being recognized as a leader in the 2024 Gartner Magic Quadrant for DevOps platforms for the second year running. That means they've been dubbed top of the class in both completeness of vision and ability to execute, not just once, but twice. We're talking prom king and queen status here, people. Gartner praised GitLab for providing an integrated alternative to custom toolchains, enhancing security, reducing complexity, and accelerating that all-important software delivery pipeline. Essentially, if DevOps was a marathon, GitLab would be Mo Farah, and we're all eating dust. But wait, it's not all rainbows and unicorns for GitLab today. Oh no, as every silver lining has its cloud, GitLab's got its share of legal woes right now. 2 major class action lawsuits have been filed, alleging that GitLab misled investors about its AI capabilities to generate code more efficiently and increase market demand for their DevSecOps platform. A shareholder class action lawsuit was filed by Holzer & Holzer, claiming that GitLab disseminated materially false and misleading statements during that time. hold on to your stocks. Folks, because shareholders who bought in between June 6, 2023 and March 4, 2024 and suffered significant losses are being urged to join the legal fray. You have until November 4, 2024 to throw your hat into that ring. And if you thought that was it, think again. Levi & Korsinski, another law firm, has also filed a similar suit. They stated that GitLab was overly optimistic about their AI prowess while hiding some not-so-rosy facts. When the truth came out, the stock plummeted faster than a caffeinated squirrel on a roller skate. On March 4, 2024, GitLab's announcement of strong Q1 results was followed by a revelation that their full-year guidance for 2025 would be significantly lowered. Ow, that hurt. A whopping 21% drop in the stock price ensued the very next day, making shareholders cringe harder than at a bad dad joke. Now the big question is, what do you all think about these developments? Is GitLab riding high on well-deserved accolades or facing rough waters ahead? Will these lawsuits put a dent in their golden armor? Or is this just another bump on the road to DevOps supremacy? Drop your thoughts in the comments below. Are you team in GitLab we trust? Or do you sense a storm brewing? Let's get that conversation going because, as always, your insights are absolute gold. All right, folks. Today, let's zoom in on CrowdStrike, the cybersecurity titan that's found itself in one spicy situation. The class action lawsuit, service outages, and investor drama are thick in the air. So what's the move with CRWD? Should you sell, buy, or hold? First and foremost, always do your own research. My advice is here to give you some perspective, but your portfolio needs your personal touch. Let's break down the situation. Why you might consider selling. 1. Lawsuit troubles. Legal battles can lead to reputational damage and financial liabilities. CrowdStrike's current class action suit is rooted in alleged false statements and software testing mishaps. Investors hate uncertainty, and legal clouds can definitely cast big shadows. 2. Service outages. Impact. The unprepared software rollouts caused major outages, which is like spilling hot coffee on yourself in a tech context. For a cybersecurity firm, that's a scary glitch in the matrix, and reputations are super critical here. 3. Stock price volatility. The stock took a significant hit after the global outage incident in July 2024. Despite solid fiscal second quarter results, the market's reaction to those unresolved issues is on shaky ground. Why you might consider buying. 1. Market leader in cybersecurity. CrowdStrike isn't just riding a wave, it's one of the key players in the cybersecurity market. Any company embroiled knee-deep in lawsuits yet trudging along indicates inherent strength and resilience. 2. Potential bargain. If you're an opportunistic investor, these dips can be splendid opportunities. Stocks often rebound following litigation and negative PR if the fundamental business remains strong. With revenue growing by 32% YOY to almost $1 billion, that foundation seems solid. 3. Long-term vision. Cybersecurity is a robust sector. With growing relevance due to rampant digital transformations, CrowdStrike's long-term potential could make the current dip a discount entry point for savvy, patient investors. Why you might consider holding. 1. Balanced outlook. Insiders and analysts have a measured optimism following the recent stock swings. CrowdStrike's dips might correct as the lawsuit revelations evolve, so holding on could allow for a steadier, less rash decision-making process. 2. Wait for more info. With the class action lawsuit's lead plaintiff deadline approaching, more concrete details will soon unfold, providing clarity that could significantly affect stock dynamics. 3. Earnings potential. Analysts have observed strong growth even amidst turmoil. If upcoming predictions meet or exceed, there's substantial upward potential. The decider. Given everything on the table, if I were making a call based on the news today, I'd lean towards holding CrowdStrike stock. Why? The cybersecurity sector remains crucial for all industries, and I believe in CrowdStrike's long-term vision and market stabilization. Although there's a storm now, seasoned embedded clients may weather it. The stock fluctuations are rough, but holding eases you into a better-informed decision soon. Plus, holding offers the benefits of both accessing future profits and reducing hasty reaction risks to current volatility. Remember, context perspective makes the ultimate investor, and no move should be panic-induced. Keep researching, keep analyzing. What's your take? Hit the comments, buy, sell, or hold. Let's chat it up. Wow, what a whirlwind of a day on the NASDAQ. We've navigated through turbulent legal waters with CrowdStrike, marveled at Google's mixed bag of both promising partnerships and regulatory pitfalls, witnessed MongoDB's lawsuit saga against the backdrop of optimistic earnings forecasts, and rode the highs and lows of GitLab's acclaim and courtroom drama. The tech landscape sure knows how to keep us on our toes. If you enjoyed today's dive into the market, don't forget to like, subscribe, and share this video with your fellow tech aficionados. And make sure to tune in tomorrow for another round of exciting tech updates. Catch you next time.